Hello and welcome to MF Corner's special YouTube edition. I'm Pavitra Parekh, and since we've just entered a new year, I think it's a good time to think about planning your finances in 2024 and the strategy that you really want to follow. I have Mrin Agarwal, financial educator and director at Finsafe India with me to help all of us out. Mrin, thanks for joining us and wishing you a very, very happy 2024. And you know, it's a good time to be looking at these big goals, right? It's a fresh start. So tell us, when you start financial planning, what do you need to do just in terms of sort of assessing your own financial position and your own starting position?
So the first thing is, of course, at the start of the year, the first thing would be to really look at, do I have a financial plan in place? And by that, I mean, am I actually investing based on a financial goal? Because what happens is that if you're investing just like that, like just based on market movement and not really linked it to goals, the biggest issue is that you wouldn't know, till when to hold on. And the other big issue is that you would never be sure that you've chosen the right instrument or not. So many times I see people saying that they'll choose an instrument and then they'll decide later on, but there would be a big difference in return. So for example, for retirement, I have seen people investing even in fixed deposits, right?
Yeah.
And clearly, if you have that 10, 15, 20-year period for retirement, a fixed deposit that doesn't even beat inflation is certainly not going to be the right instrument for you for this particular goal, right? So the first thing to really check is that have I defined my financial goals, and are you actually investing as per goals, or are you doing ad hoc investing? So even if you have an existing portfolio of investments and you haven't yet tag them to goals, then start thinking about your goals and tag these investments to those particular goals.
Okay, got that. So that is step one of what you can really do. But now consider that you've, sort of understood where you stand, where your current financial position is. What are the steps that you need to follow when drawing up a financial plan or an investment plan? Because this can be a little bit intimidating, right, for someone just starting out. So what are some key steps that you can follow?
So one, as I said, is that you have to define your financial goals.
Yeah.
The second thing that you need to do is that look at what are the investments that you have and how long you can hold these particular investments, and look at tagging these particular goals. The third thing that you, of course, need to do, as I said, you need to look at working on a calculator to figure out what is the right amount that you need to invest for these particular goals. So once you get to know what is the right amount to be invested, taking into account the existing investments, and there are many calculators that are available online that are going to help you with this, and these are free calculators that are available online. So one is defining the goal. Second is figuring out the amount to be invested further after tagging your existing investments. And then third is, of course, doing an evaluation between the various schemes that are available to decide which one to go with.
Okay, so now you've sort of identified how much money you need, the different goals that you're going to be allocating to as well. But for someone who's starting out and they want to invest, but it's probably a smaller amount, do you think it may not be practical to really split that corpus into separate funds for your retirement, for your home loan, for education? How would you suggest someone go about it when they're just starting off?
So of course, for goals that are for a similar period, you could always look at one investment, or you could split it up. It really depends upon your comfort factor. How easy is it going to be for you to remain invested and stay committed to this particular investment, right? So, and if you feel that, okay, you want to split it, that's also fine. I mean, there's no right or wrong in this. It really depends upon what is your comfort factor. Of course, it also depends upon what product you've chosen. So for example, for retirement, if you have NPS and you've also chosen an equity fund, then automatically you are going to have separate investments. But let's say you have a child education goal and a child marriage goal, and you could choose the same fund for both of these goals and just look at investing one amount and say, okay, when I need the money for the education, I'll pull it out and leave the balance for the marriage goal. So there's really no right or wrong in this. It really depends upon your comfort factor.
Okay, got that. Finally, just one more question before we wrap up. What are some investments that you would recommend to a first-time investor? If someone is willing to put in 5,000 rupees a month or 10,000 rupees a month, what are some first-time good investments that any investor can follow?
Well, one, for retirement, I would always recommend the NPS active equity option. And two, for your other long-term financial goals, I would say start with a simple index Nifty 50 mutual fund. I would also add, what I would not recommend would be, of course, F&O trading and all these things. Invest in these, see how the experience is, and keep learning and keep adding on.
Okay, that is great advice for anyone starting out and wanting to plan their financial investments in this year and all of the years to come. Mrin, thanks a lot for joining us and taking us through that quick class on this. With that, we're going to wrap up on this MF Corner special.